Aaron, to my understanding, had sent out to you a version of a return for Jeremy and Janice. And I believe you were asked to actually do the return. So I'm working off of the assumption that you have some knowledge of the facts, or you might even have the fact situation sitting in front of you. But I'll try to describe it as much as I can. What we've got here is we've got Jeremy and Janice. Excuse me? We've got Jeremy and Janice. Both worked in 2016, but Jeremy also experienced some unemployment. Jeremy tells you he had health insurance that meets minimum essential coverage through work himself and their two sons, and then had COBRA coverage. And COBRA, and some of you guys know this, but COBRA basically means that it entitles you to take health insurance even after you leave employment, at least for some period of time. Janice did not have coverage. So what we've got is we've got Jeremy and Janice. They're both working people. Jeremy didn't work for part of the year. They've got two children. Jeremy and the children were covered under insurance, but Janice was not. Okay, we've got a completed intake, interview, and quality review sheet, our 13614-C, filled out for us, and we've got essentially 4 Social Security cards provided to us. So let's start the return. Start new tax return. And in this case, I'm going to enter the Social Security number for Jeremy, and I'm going to put in 051002823 is the one I'll choose. There we go. And 0512823 is what I'm choosing. Just sort of a fake number that I'm coming up with. But it started out with the right numbers that Taxslayer recognizes it as just one of our VITA practice returns. So I'm going to start the return. So really at this point I'm just creating a file for this tax return. Now I'm going to take a quick spin through the filing status wizard. We don't really need it in this case. Like I said last week, you need the books. You need someone like me who's talking about things in some filing status cases. In others, you don't. Here we've got Jeremy and Janice. They're married and they want to file together. It's married filing joint. I know that. But let's go into this wizard just for the heck of it. Were you considered married? Yes. Were you a U.S. citizen? Yes. Did your spouse live with you at any point? Yes. Based on your answers, you can elect to file married filing joint. And in fact, guys, that is what we'll do. Now, this will be provided in recording. So I know that if you're in the back of the room, it's probably almost impossible to see some of this detail there. But if you have the recording, you might be able to kind of enlarge your screen a bit and see kind of what I'm doing if you'd like to kind of walk through it again with us. Okay, so we've chosen filing status of married filing joint. Continue. In this case, they want the taxpayer's name. This would be Jeremy. Middle initial of A and last name of Clark. No suffix, not a junior, senior, etc. Date of birth for Jeremy is 3/17 of 72. And spin down there a little bit and grab it. And his occupation, he's a technician. Okay. None of these are going to apply to him. And let's see here. Looks better. Technician. Did we get that right? It doesn't look too bad, does it? Okay, and none of those apply to him, so we can leave them all blank. Of course, we'd want to look at it and assess our individual taxpayer in front of us, but in this case, none of those apply. That doesn't mean they never will. It just means in this case, they don't. And Clark filled in automatically for us. Janice's Social Security number will use 052001234 is what I'm going to choose. Her date of birth is 12/12 of 74, 12 and 12 and 74. She's a little bit younger. She's an assistant manager. Check here, none of those apply. Address and phone number, not foreign, not anything military related. So in this case, 1129 Charles Street is what we've gotten as our address, and no apartment, and then we can just fill in zip, and I'll fill in my zip for Plover, 54467, and as you can see, it nicely fills that in for us. We do need a phone number, and so I'm going to put in the number that was provided. So that's just the most basic of biographical information, and then I'm going to go continue. All right. Now, this is Wisconsin related. Now, they just knew from the address, the zip code, which provided an address, they knew this was Wisconsin. So somebody in Illinois, I don't believe this is going to pop up. In fact, I would think that it won't pop up. But with a Wisconsin address, this pops up. The county in which they lived on December 31st. So note the wording. The county on December 31st. They could have moved there December 30th. We want the December 31st county. And in this case, we're going to say it is Portage County. The school district. Now, if they're a property owner and they bring you a tax bill, that's beautiful because it's going to tell you the school district that they're in. It's going to tell you the municipality that they're in. Otherwise, sometimes it's a guess, right? Because you guys know how it works, right? 5 miles outside of Wapaka, they may be going to the Waiawega School District, and they may have a Wapaka address, and they may be in Shawanoka. I mean, there is no absolute rhyme or reason where school districts are bordered and where counties are bordered and where municipalities are bordered. We just need to know it. If they've got a tax bill, that'll tell us everything. If they're renters, they might be guessing at it. And guys, really, frankly, we just need to go with the guess. We do the best we can. We don't want to kind of rip anybody off. We don't want to short one municipality versus another. But the fact is that we just need to go with it. But this is very specific to the school district. The question is, if they had an 8-year-old, what school district would they go to school in unless they did something special like school choice to override the normal school district that they go to? So in this case, it happens to be the Stevens Point School District. The municipality, I live, and anybody who's with us, I bet there's other Plover folks with us, I live in a village, the village of Plover. And again, that is very specific. I could have been in the town of Plover, but I live in the village of Plover, and you just need to know it. Okay. All right, but that's Wisconsin. All right, dependents. Do we know about dependents? Yes, we do. Now, we talked about it last week, guys. This Taxslayer has a beautiful wizard for filing status, but not so much for dependents. Dependents is pretty much a matter of us going to tab C in 4012 and kind of making our determination of whether or not we have a dependent or not. Now, in this case, we've made the judgment almost preliminarily that, in fact, there are 2 dependents, Thomas and Sean. And Thomas is a J, and they just presume the last name. Of course, we can overwrite that if we need to. It just presumes the same last name. A lot of times we will need to overwrite it, and it's the easiest thing in the world to do. It just kind of says, well, I'm guessing it's Clark. And we say, no, good guess, but no, it's not Clark. Okay, date of birth for Thomas, 6/8 of 2001. Okay, there we go. Thomas's social security number. And we need that. We need a social security card for Thomas, or we can't be doing the return. The relationship is son. It presumes 12 months, but we can override that, and we often will need to override it. Now, in this case, none of these apply to Thomas. None of these check marks apply to Thomas. They very well could, but they don't. Okay, and then we've got another dependent, so I'm going to add a dependent right there. Now, you guys could be almost bored watching me do this, because really, I think that Taxslayer does a great job of making this pretty darn friendly for us. So some of it is it's just kind of apparent to you what you need to be doing within Taxslayer, and that's the way we would want it to be. Really, with our program last year, as all the good things that it had, I don't think it was as clearly the wording wasn't as clear as it is in Taxslayer about what we need to be doing. Okay, relationship, that's another son, 12 months, none of those apply. So here we've got the two dependents entered, and I'm going to continue, and I'm going to say added dependent, nope, got them all, continue again. Okay, and money you earned, in this case, we're always going to go guide me. Your site coordinator will make a determination of whether or not it's appropriate for you to be using Guide Me or Enter Myself. I think probably early on, we're by and large going to be using Guide Me, but that's not my call. That's kind of between you and your site coordinator. But I'm going to show us using Guide Me, which is more kind of here. I'm going to take your hand and let's walk through this baby. That's a great advantage for us. A lot of us don't have, those years and years behind us. And so Guide Me is really a benefit for us, and we should treat it that way. Okay, so W-2 income. You bet we've got W-2 income. Our first W-2, as I'm seeing it laid out here, is for Janice. It's her GK associate. So I'm going to check Janice. Remember, we're careful with that so that we get the Wisconsin married couple credit right. And really, there's other factors, too, that make choosing the right one important, too. I really shouldn't have just focused solely on the married couple credit because there are federal items that make that important also. Oops. The EIN there is 131. And I think I can choose just about anything. And we'll notice that, boom, GK Associates pops up. And that is that I think anybody anywhere in the country who puts this EIN in is going to create a database, and it's going to give us a pre-filled in employer name, address, etc. So, if you, when you get to the point that, February 18th, if you put in Walmart's EIN, Walmart will pop up for sure. If you put Joe's filling station in, it probably won't. So that's a nice little time saver for us. Okay, the wages, 21,682. Now I'll leave it up to maybe your site coordinator, whether you want to be putting in pennies. Most tax programs don't let you put in pennies. This one does. So I suppose I'll put them in. What the heck? I don't know. It really depends. I mean, you put in, the more numbers you put in, the riskier it is, in the sense that there's more chances to make a mistake, but it'll tend to calculate things a little bit more precisely by doing that. So I'm checking the retirement plan box here. I'm going to say the state is Wisconsin. In our case, the state EIN sort of filled in automatically. It just adopted the federal EIN. Even though for Wisconsin, we tend to get these really obnoxious, about 12-digit strings that are state employer ID. So usually you can't just accept the federal EIN. That wouldn't be appropriate. Okay, now some of you pointed out that the state wages were wrong on the W-2 that was produced, so I'm just going to ignore that. And so I think what we've got is we've got a W-2, and as you can see, guys, what is W-2? It's really just a template, and we're filling in the amounts that are on the form. We're just sort of data entry people at this point, aren't we?
Is there any amounts to go in line 12 for the retirement plan?
Not in this case. Okay. On the next one, there would be a deferred compensation plan, and that has the need for a special one. But if this is just an employer-funded retirement plan, there wouldn't be anything, but it would be, in fact, they'd be covered by a retirement plan. Yeah. So we don't need one and the other always. We do sometimes. Okay, and then continue.
Another thing to check on, especially for new people, when that box 3 and 5 automatically fill in, make sure that's what the W-2 says. Because there's situations where those numbers aren't the same, so I always double check that. Last year we used to have to check a box to make adjustments. This year you can just change it. But I always double check it.
Okay, great. Thank you, Tom. And then I'm going to put in Jeremy's W-2. here, and we'll note one thing about Jeremy's W-2 that makes it a little bit unique as compared to Janice, and that is that the Social Security wages and Medicare wages are different than the taxable wages in Box 1. Box 1 is essentially income taxable. Box 3 is basically Social Security taxable, and Box 5 is Medicare taxable, and they don't always need to be the same. In fact, they often will not be the same. In this case, we've got $900 being contributed by Jeremy to a 401k retirement plan. That $900 reduces his income subject to income taxation in Box 1, but it does not reduce Social Security or Medicare. So we see Social Security and Medicare as being more than the wages in Box 1. And so by changing that, we conform it to the actual W-2.
Isn't that the same?
What's,
Didn't you put
they look very close, Kathy, but they're different.
Oh, I see.
Okay, and then we've got a retirement plan, and then we've got a couple of codes in Box 12. We've got Code D for that 401k retirement. And we've also got another row. We've got the double D, which is the employer-provided health insurance amount, which is really almost, frankly, guys, is almost sort of a trivia amount. It doesn't really change anything that I can really think of off the top on the tax return. It's just more informational than anything that Code double D.
I have a question on double D.
Yes, please. Go for it.
Oh, is it, if it's double D, is it always saying that that's the employer's paying for it? Or it's just the cost?
I
the
believe
employer
that
insurance.
double D is the employer-provided amount. Let me see, I'm just gonna take 1 minute, because I don't think it's gonna, well, no, it's important, but we just don't have time to go too far with it.
In the book, it says it's cost of employer-sponsored health coverage, but I didn't know if that meant that the employer was paying for it or the
I
taxpayer
think
was
the
paying for it.
taxpayer. So if they tell you the health.
So, no, the double D means that is the part of the premiums that the employer is paying that the employee is not paying. And
employer's
that's
paying.
that's why I say it is not a terribly relevant amount for us. Now, let's see here. I need the form W-2 instructions, and I'm afraid that this is, well, there we go. General instructions, and I'm going to look for the instructions for the code. So these are really instructions that are being given to the employers, how to fill out W-2 forms. And let me see if I can find this. Again, I just can't spend much time on this to get it specific, but we'll try to do our best here. Box 12 codes, we're getting closer, guys. Code double D. Did I go past it?
Yeah.
Yep,
Did I?
I think it's in the right-hand column.
yep.
I'm just not seeing it.
There's code D.
Yeah.
Yeah, that was
goes
code
to
D.
E.
All right, let's see here.
Double.
Code double D. Use this code. Let me get it big enough. Sorry. I don't know why that's not giving me the choice to increase it. I'll read it. Use this code to report the cost of employer-sponsored health coverage. The amount is not taxable. So, my reading of that, in fact, I'm quite sure of that this is not what the employee is paying. This is the part that the employer is kicking in. And really, the idea behind it, guys, it was Affordable Care Act. It was to give people an appreciation of the value of their employer-provided health insurance. And really, when I see my number, I'm appreciative of it. I'm like, oh my God. And like, thank you, college, for being such an employer for me. Because it's a big number, right? I mean, health insurance is important. So that's the way I would answer that. Okay. All right, then, state tax paid being $423. So I think we've got this W-2. So just a little bit of this is Jeremy's W-2. Employer identification number. The employer name, address filled in automatically because the Taxslayer database had that EIN in it. The address, that's filled in automatically based on the address that we put in for the taxpayer. The box 1, 2, 3, 4, 5, 6, 12, retirement plan box. Those were all basically me just being a data entry person. Now, I came up with an approach to these forms that I adopted 25 years ago, and I think it served me well, and I think it served the people that work for me back when that was what I did. And that is, when you have a form like this, do your entry, but then take a moment, step back and count the boxes. Let your eyes, make your eyes go to every box. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. I got it. You know, because while you're doing that count, you're going, I entered it, I entered it, I entered it. You know, you're just in your mind remembering 45 seconds ago, I did that, I did that, I did that. Because you're going to get to box 16, you go, I didn't do that. Okay, I missed that. And what happens is that the boxes that you don't normally see, something like dependent care benefits, which can be critical to a tax return, you're going to see that 1 out of every 50, 60 W-2s, maybe every 100 W-2s. And so you're not going to be used to doing that. That counting of boxes can be a very effective way to being accurate on a tax return. Okay, continue. All right, that's W-2. Continue. Income guide. Do I want help? Yes, I do. State refund. In fact, they're asking the question. Enter an amount. Continue. Now, I think I did something wrong. Let's see. Did you receive? No. Okay, beg your pardon. I just read that wrong. Pay attention, savers. Did you have any interest or dividend income? Yes, I did. Was it interest or dividend income? Yes, it was. Was it interest income on a 1099 INT? Yes, it was. Check it and continue. And we're going to put in, there's a 1099 INT here. It's from ACE Financial. And it's for the taxpayer. The interest income is $220.75. Continue. And do I have anything else? No. So continue. Do I have anything, relevant like tax exempt or foreign interest, I should say, or double E an I? And guys, double E I U.S. savings bonds relates to using interest or using the proceeds of cashing in U.S. savings bonds for education. That's specifically what that line relates to. Income guide. Did you receive a 1099-IR? No. Did we get any Social Security income? Any benefits? No. Did we get unemployment? Yes, we did. Did we get a 1099-G? Yes, we did. What is the employer identification number? It's 134-11111, and I think that'll fill it in automatically. The unemployment was $7,550. That's it. Got it. And this is a good one for the I's. 1, 2, 3. In fact, where is box 3 here? I guess it's just kind of a sloppy 1099, 3, 4, 5, 6, 7. Because one thing, 1 out of every 10 of these, you're going to have federal income tax withholding. 1 out of every 15, you're going to have state withholding. And if you do that that analysis, 1, 2, 3, 4, 5, 6, 7, your eyes are going to go, oh, federal withholding. And you catch it. Well, we don't have that here. So I'm just going to go continue. Taxpayer spouse, that was Jeremy. Thankfully, it let me know. I was about to skip over that. It caught me. Good for it. That's all the unemployment we have. And do we see any other income? And I'm looking at the income. 2 W-2s, 1099 INT for interest, 1099-G for unemployment. That's all the income we know about. If we look at our intake sheet, we see that the only thing checked for income are wages, salaries, interest, and unemployment. Got it. So I've got all the income. I don't need to go into these specialty areas because I'm confident I've reported all the income. Okay, now, let's see how to cut our tax bill. Guide me, please. Deductions, did I have child independent care, earned income credit, adoption? I'm going to say no in this case. Now, let's see whether there would be, in fact, I think probably in fact, I need to say yes, because there should be earned income credit. Child care expenses, or dependent care expenses, no. Do we need to adjust the calculated earned income credit? So, I don't need to do anything here, gang, but I did think that they're getting earned income credit, so I at least let this screen come up, and it might prompt me to ask whether they had previously been disallowed the earned income credit, because that's a question you're going to need to deal with at some point in time. But in our case, we're going to say no to this. And then adoption, no to that. Own a home, no to that. We just don't know if they owned a home. Deductions, charity, we don't know of any. And in fact, I'm basing that not on just my guessing, I'm basing that on the intake sheet. They're saying no to all of this stuff. Any other of these deductions, I look at them. Medical, dental, health savings, medical savings, health insurance for self-employed. No, 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 no. And say no to that. Discuss these topics further. Student loan, I don't see a 1098E in front of me, so I'd say no to that. Expenses for higher education, well, we certainly could have that. We talked about education credits. We talked about education benefits, but we don't know of any of that. So we're going to say no to that. Anything, car registration fees, property tax on personal property, hybrid, no to all of that. Educator expenses, that'd be like a primary school teacher who buys supplies for the classroom. No. Moving expense, no. Business use of home, meaning that either as an employee or a self-employed person, they have a specific part of their home that they use for business. We don't know of that. Traveling expenses, we don't know about it. Job related, so all of that is no. Federal and state estimates, no, they don't make quarterly tax payments. No. Any other kind of weird federal withholding on some form that we haven't entered? No. Other kind of weird state withholdings? No, we don't know about that. We've got W-2 withholdings, but that's not weird withholdings. That's normal withholding. Sales taxes? No, we don't. We're not going to do that. Sales tax relates to that would be for an itemized deduction. We don't know of any of that. Foreign taxes? No to all of that, guys. Okay. IRA deductions. We don't know about any IRA deductions. Retirement savings contribution credit. That is applicable, guys. They have money that is deferred by a 401k. Now, I don't think they're going to get it. I'm not sure, really. I don't think they get it. But it's relevant because this retirement savings contribution credit just basically means that these folks had put money away for retirement. And we can see on the W-2 that they have a code D, which means that they contributed to a 401k. I'm going to say yes to that. Did you or your spouse contribute to a traditional IRA? No, 401k is not a traditional IRA. I'm going to say no to that. Did you make contributions to any of these retirement plans? I'm going to say yes, because we see a contribution to a 401k. I'm going to say yes. But now we're going to note, hey, the program already sees that for us. We really didn't need to go in there, but it's a good idea just to follow the prompts and kind of let it walk through it. Retirement savings contribution credits, well, it doesn't look like it calculating. They've got too much income for it. Well, we gave it a shot. All right, deductions, guide, investment interest, no. Self-employed, no. Any of these deductions that we're looking at here, no. And I'm sorry for going fast, but we need to. Congratulations, we've gone through deductions. Okay. Other taxes. Do we have self-employment tax? Or do they run a business and they have Social Security tax for self-employed people? No. Alternative minimum tax, well, hopefully Taxslayer's keeping an eye on that for us, but we don't really know of any of those kinds of issues. And in our world, alternative minimum tax would be pretty unusual. Wouldn't be unheard of, but it would be unusual. And really, none of those apply, guys. None of those apply. If you ever run across those, ask Tom or ask your site coordinator, and you can get a little more guidance on that. Okay. All right, and basically I'm kind of going through this a little bit quickly. I'm kind of watching the clock. We're already really at the end here of our time. Here's health insurance. Did you or your family have any health insurance? Yes. Continue. Did you purchase through the marketplace? No, it was employer provided. Janice didn't have any, but she didn't get it through anybody because she didn't have coverage. Verify household members. Now, we would add to this list, there are a couple other categories, but specifically someone under the age of 21 who we're caring for in our home that's not a dependent. We would add that person as a household member. We don't have any of that, so I'm just going to say continue. Was your entire household insured? No, Janice wasn't. So Jeremy, 12 months of coverage. Janice, 0 months of coverage, right? Individual shared responsibility payment, maybe headed our way. Thomas and then Sean, continue. Because it was Jeremy and the boys who were covered. Dependents modified AGI. Remember, we only include the dependent's income if that dependent themselves has a filing requirement as a dependent. But remember, filing requirements for dependents are much lower than they are for non-dependents in most cases. Okay. Healthcare exemptions. Well, I'm just going to, now we could go here, gang. We could click on this and it would take us to healthcare.gov. And we could walk through the screens and we would be able to determine whether there's an affordability exemption. Now, we're not going to do that because of time, but all I needed to do was click here and it took me right to healthcare.gov, and that's a great resource right at our fingertips. I'm just going to put in here that the monthly premium for lowest bronze was $400, and for second lowest silver was $425. I'm really not that far off, but they're really just kind of guesses that I came up with. Okay. All right. Calculating a return. All right. And did you receive an exemption certificate? No. Because they are, we don't qualify for any coverage exemption based on income. Now it's looking for other exemptions. Any exemption through the marketplace? No. And so Janice is subject to the individual shared responsibility payment. It got her. So those screens are very helpful, aren't they? They walk us through a lot of it. State return, continue.
Now, Bob,
Yeah.
let's say there was, in like one of the situations in our scenarios, there was a mother and a child that didn't have insurance. And the question came up, was she responsible for individual payment for her or just her and her son? Will that tell us who the payment is for, if it's for both of them or if it was
because
for one?
it's asking us, was everybody covered? Mm-hmm. And then we say no. And then it gives us a list of the household members. And we have to specifically say which each of their situations are.
Okay.
So we're specific. We're talking about, here's mom's situation. Here's the kid's situation. Here's dad's situation. So
But
yeah.
when it comes up
where did it
as
show?
their penalty, it comes up as $760. Is that just for her not having insurance, or is that for her and her
Yeah,
child?
and that would be the form that the individual shared responsibility payment is on, and I don't really know the detail of that form, whether it breaks it down by or whether it puts it as a lump number.